How often can I refinance my mortgage? Have you ever wondered how often you can refinance your mortgage? This is a common question among real estate investors, especially when it comes to managing investment properties. Let's break it down together. First off, there is no strict limit on how often you can refinance your mortgage. However, practical and financial factors usually guide how frequently refinancing makes sense. Refinancing means replacing your current mortgage with a new loan. This can come with better terms like a lower interest rate or a different loan duration. For investment properties, refinancing can be a smart move to improve cash flow, fund renovations, or even expand your portfolio. Now, let's look at some key factors that influence how often you should consider refinancing. One major factor is the financial benefit. Refinancing should make financial sense. The new loan's interest rate and terms should offer enough savings or benefits to outweigh the costs of refinancing. These costs can include lender fees, closing costs, and potential prepayment penalties. Refinancing too frequently without a clear financial advantage can eat into your returns. Another important consideration is property appreciation and equity. If your property has significantly increased in value or you have paid down enough principal, refinancing can allow you to tap into that equity. This can be used for improvements or new investments, making it a strategic choice. The interest rate environment also plays a big role. If market interest rates drop significantly below your current mortgage rate, refinancing can lower your monthly payments or shorten your loan term. On the flip side, if rates rise, refinancing may not be beneficial. Additionally, loan requirements and lender policies can affect how often you can refinance. Some lenders may have minimum time requirements between refinances, often around 6 months to a year. This is to prevent rapid refinancing. Investment property loans usually have stricter standards and higher interest rates than primary residence loans, which can also impact refinancing frequency. Your overall investment strategy is another factor. If you plan to renovate and increase rental income, refinancing to access funds makes sense. However, refinancing too often without a clear strategy can increase costs and risks. In practice, many investors consider refinancing their investment properties every few years or when specific conditions arise. These conditions can include a significant drop in interest rates compared to their current mortgage, a substantial increase in property value or rental income, or a need to access equity for renovations or new investments. Changes in your personal financial situation that enable better loan qualification can also prompt refinancing. From the perspective of real estate investing, refinancing is a powerful option but should be approached thoughtfully. You can refinance as often as you qualify and it makes financial sense. Typically, investors refinance every few years or when market or property conditions change significantly. This helps improve their investment returns while ensuring that the costs and administrative effort do not outweigh the benefits.